The floor to sheet test was an example of tracing, because where do you start when you trace? The source documents, or the more specific item, the one that gives you evidence, right? And then you go back to the client's system, their accounting system, or the financial records, or the more general item, right? So if I started with the shipping documents, I'm like, well, an item was shipped out. I wonder if they recorded that item as a sale in the income statement. So I would start with the shipping document, go back to the client's system, right? I would trace to their system to see if it's included. What assertion would I be getting evidence for that one? Yes, completeness of what in that example? Well, it was a shipping document for a sales transaction, so it'd be completeness of the sales journal or sales account or the income statement. When you trace, you're always tracing for completeness. No matter if you're tracing something that's a transaction or event or a balance account, a balance. When vouching, it's always going to be this direction for complete or for existence or occurrence. When tracing, it's always going to be starting with the source document, ending with the client's records, listings, trial balances, their system, and you're always testing for completeness. You remember in your notes a couple weeks back, and I told you guys to make a specific sheet for each assertion? This was one of the reasons why. Because soon we're going to have to know which assertions apply to what type of accounts. So if you see the word occurrence, you know that you're talking about a transaction or event. Then you know that it's going to be something related to transactions and events, things that happen, sales, purchases, expenses, etc. So how do you know the difference between the two? Well, which account are you talking about? Are you talking about cash? That's a balance sheet account. If you're vouching, it's going to be existing. Are you talking about a purchase? That's an event. That's something that happens. Then you're going to be vouching for occurrence. If you're tracing, it doesn't matter. Remember, completeness was one that was on both sides. It was both assertion for transactions and events and for balances. So when you trace, you're always tracing for completeness. One thing that you want to get in the habit of is kind of setting up your tracing and vouching testing so that you know where you're starting from, what you're tracing or vouching, where you end, and why. 4 things. First, you want to know where you're starting. Are you starting with a record from the system? Or are you starting with the source document? Knowing where you start is going to tell you whether or not you're tracing or vouching. Don't get mixed up with the arrows, like one is on top and one is on the bottom. Because if I drew this, the inventory listing, right? If I started with the sales journal and then went to the shipping document, I'm still starting with a financial, something from the system, a record from the system, and going to a source document. So it doesn't matter which way the arrow is, it matters where you start and where you end, right? So this would still be an example of vouching because of where I started and where I ended. So don't get too caught up with one's on the top and one's on the bottom. That's not going to help you. What will help you is knowing where you start and where you end. If I start with something from the system, a financial record, and go to a source document, I'm going to be vouching. If I start with a specific source document and go to the system, I'm going to be tracing, right? So where you start and where you end. Then it's also helpful to know what you are vouching or what you are tracing. Typically, it's going to be a sample of whatever's in the financial statement record is. So a sample of inventory, a sample of sales transactions. That's typically going to be the item that you are vouching or tracing. And the 4th thing was the purpose of the test. Purpose of vouching or tracing, that's going to be related to your assertion, right? There is a document in your course documents. You're going to have to scroll through them, but there's one that specifically helps you with tracing and vouching. Actually, there's a couple, because like I said, it's something that we're going to be doing the whole entire class. And so, yeah, so you, to rephrase that, when we're doing an audit procedure, will you have to know the purpose of it? Yes. So if you're vouching, then you will have to, right? So we can tell the difference. If you see revenue and you're vouching, so 4 things you pretty much want to remember: what you're tracing or vouching from, where you start, what you're tracing or vouching to, what you're tracing and vouching, so a sample of shipping documents or a sample of accounts receivables. And then the 4th one, the purpose. Why are you tracing? Why are you vouching? Well, if you're tracing, you're always tracing for completeness of the financial statement account. If you're vouching, you're always going to be vouching either for existence or occurrence of that financial statement account. I stress the financial statement account part because remember, it's the auditor is testing the details of management's assertions over a financial statement account. How do you know when you're looking at something if it's a substantive test versus a test of controls? It could be both, but if you see a financial statement account like cash and you see an assertion like existence, it's always going to be a substantive test. It might be both, but at minimum, it's a substantive test. So get in the habit of saying existence of what, right? Occurrence of what, completeness of what. No matter what you're testing, it's always going to be the financial statement account related to it. So existence of cash, occurrence of revenue, completeness of cash, completeness of revenue. It's always going to be referring back to the financial statement account because that's the whole purpose of this, right? The auditor is testing the details of management's assertions, existence, occurrence, completeness, over a financial statement account. Soon, I promise the light bulb will go off and you'll realize that, so you're telling me if I see existence and I see cash, that it's a substantive procedure? Yes, right? It's not a test of controls, it's a substantive procedure. So it's what you're tracing or vouching from, so where you start, what you're tracing or vouching to, so where you end. What are you tracing or vouching? That's usually like a sample of whatever the financial statement account is. So a sample of receivables, or the source document, a sample of, receiving documents. And then the fourth one is the purpose. Why are you tracing? Why are you vouching? Well, you're tracing for completeness of whatever the financial statement account. You're vouching for existence of or occurrence of whatever the financial statement account is.